Hey everybody, back with another dividend analysis, and today we're going to be looking at the Hershey Company, HSY, or simply Hershey. Wanted to take a look at Hershey because some other people have weighed in on it recently, and I wanted to give my perspective from a dividend point of view. So without further ado, let's get into it. As always, we'll start with a dividend yield, currently sitting at about 2%. Really the minimum for me to consider something a dividend stock is that 2% yield. It's doing a little bit better than the wide market, which is paying about 1.5% if you're looking at the S&P, a little bit less than that, I believe. So nothing to write home about, better than the wide market, but nothing crazy. Going back over the dividend history, we can see that we were getting about 48.5 cents in 2013, and now 8 years later we're getting about 90 cents a share, which is very nice. Very consistent growth. The dividend has almost doubled in that 8-year period. This is really what you want to see from a dividend investment. If you're looking for appreciation, you want to see really nice, not huge growth, but very stable, very consistent growth over a time frame, getting 5, 6, 7, up to now a 10-cent raise on that dividend. Very nice. Good to see here. No red flags at all. Moving over to the numbers, we can start by looking at the dividends that they paid out in the last year, which were about $651 million, and we can go see if they were able to support that. As usual, we'll start with our cash flow, and looking at the last 4 quarters cash flow, which was $1.62 billion. If we do our calculations, we can see that their ratio of free cash flow, their payout ratio, was 40%. Very nice there, well under our 50% ideal range. This means that, even if this 12 months, these 4 quarters were an anomaly and they fell back to these numbers from the previous 4 quarters, they'd still be able to well pay out that dividend, no issues. Also, looking at the cash flow over the last 10 years, very good, solid increase, going from $300 million to quite an interesting spike at $800, going down a little bit, but then once they got over $1 billion, they've stayed there. One thing to look at is if they are actually making more money or if that cash flow is coming from acquisitions. I would check into that if I were you, just to make sure where that cash flow is coming from. It won't make a huge difference, but it is always good to know if they are organically growing that cash flow, if they are growing by some amount every year, or if they're just acquiring more businesses, more segments to increase their cash flow. Next, we'll take a peek at the income. We can see that in the last 4 quarters, their income was $1.44 billion. And if we do our calculations here, our income ratio payout is 45%. Again, well below our 50%. Even if they did a little bit worse in the next 12 months, they would still be able to pay this out really easily. For them to have any issues, they'd really have to fall back to these numbers from like 5 or 6 years ago. Again, just like their free cash flow, their income has been increasing over the last 10 years in kind of the same way. Again, I'd want to see if they've been acquiring other segments, new subsidiaries, things like that, to see if that growth is organic or if they're just adding to it with other parts of other new parts of the business. So how are they generating this income? How are they generating this cash flow? I'm pretty sure I don't have to tell anyone, but Hershey makes candy. That's what they do. That's what they're known for. They control almost half of the U.S. candy market, so they do have plenty of competitors like the Mars Company, others like that, but they are the big dog in the house. I'd really, if I was in this, I would like to be keeping track of that market share. If that drops a lot, that might impact their cash flow and their income, so that is something to keep an eye on. They also have about 10% of their business from overseas sales, so about 90% of their business is domestic. Very little of it, 1/10 of it, is overseas. Also keep track of how much money they're making in the US versus in other markets. So when it all comes right down to it, do you want to buy Hershey if you're a dividend investor? Is this something you're looking for? I think from the appreciation side, this is kind of a no-brainer. If you expect them to keep doing what they've been doing over the past 8 to 10 years, this is really a good choice. I mean, if we go back to the appreciation, the dividend increases, they've been very nice. Anywhere from, an 8 to, a 10%, 11% increase, 12% increase. You're really getting a lot of increases in that dividend. It's gone up almost 2 times in the last 8 years. If you were able to buy back in 2013 and you've been holding since then, you've really done well, not just in stock price appreciation, but you've also doubled your dividend. That's just really good to see. From a yield perspective, there isn't a ton here. 2% isn't amazing by any means, but you could use this, as I've said before with a couple of other stocks like, something like Pepsi, something like Altria as a stabilizing force in your income. Maybe you have a bunch of high yielding smaller companies that are a little bit less stable. You throw in something like Hershey, it brings down your overall yield, but it really stabilizes and diversifies you, makes you feel a little bit better about your portfolio as a whole. One nice thing about Hershey is that if you look back over, the last, 30 plus years here, their stock has been relatively stable, not a lot of volatility. There's really only been 2 points I can see with huge volatility, being from 2005 to about 2010, and then of course the giant crash last year and the associated time. Aside from that, it's been a very stable, growing company. That's really good to see, especially if you're a dividend investor. If you can think that, if past performance is indicative of future results in this case, you could sleep pretty soundly knowing that you're not going to have a lot of volatility, and even if you do, this is a consumer staple. It's not going to go away. If the market crashes, is the price going to go down? Of course, that's just what happens. But I would highly doubt that Hershey would go bankrupt in anything outside of a crazy situation where, there's, accounting issues, management issues, stuff like that. If the economy just works as the economy is supposed to work, it'll have its ups and downs, but over the long run, you're going to get a lot of value here, especially if that dividend continues to increase. I hope that helps, and thanks for watching.